Hey everyone, welcome back to Corporate Decoder. Today we are cracking open a filing from Pinnacle, West Capital Corporation and Arizona Public Service Company. This one has a lot of moving parts, enough to power a whole city or maybe leave you in the dark. Before we dive in, if you're into getting clear insights from tricky corporate reports, make sure you're subscribed. We also have a Discord community linked in the description where we discuss these filings in real time. Come join us. So what's the big deal this time? Arizona Public Service, or APS, which is owned by Pinnacle West Capital, is asking for a rate increase. Think of it as your electricity bill potentially going up. They're trying to convince regulators that they need more money. We'll see what they're asking for and what it could mean for customers. First things first, this isn't their first try. This filing is actually an amendment, meaning they had to fix something from their original filing back in June. Turns out they needed to correct the original cost rate base amount. It's like double checking your math homework, but with millions of dollars on the line. All right, let's get into the juicy details. APS is seeking a net base rate increase. Basically, they want to charge customers more for electricity, not much more, $50 To put this 79 tonsi, $2 million. To put this into perspective, that's a 13.99% net increase. Imagine your monthly bill going up by almost 14%. That's a significant jump. They say this increase is supposed to cover 662. To version your monthly bill going up by almost 14%, that's a significant jump. They say this increase is supposed to cover $662,149 in revenue that they consider deficient. They're trying to offset this by shifting some costs around to base rates. It's like saying, we need more money, but we'll move some stuff around so it doesn't look as bad. Now, the application includes a few key proposals. They include looking back at the 12 months ending in December 2024 to justify their numbers. This period is called the test year. They also want to include new plants and equipment that went into service up through December 2025. They're saying they've invested in improvements. Also, they claim to have an original cost rate base of 12.5 billion D assets lost over December 2025. They're saying they've invested in improvements. Also, they claim to have an original cost rate base of 12.5 billion D assets. This is supposedly the value of their utility assets after you subtract things like depreciation, which is like saying how much value the assets lost over time to 2025. They're saying they've invested in improvements. Also, they claim to have an original cost rate base of 12.5025. Here's where things get interesting. They have a proposed capital structure, which is how they're funding their operations. 47.65% of their funding comes from long-term debt, which costs them 4.26%. The other 52.35% comes from common stock equity, which is more expensive at 10.7%. When you average it all out, their weighted average cost of capital is 7.63%. This tells you how much it costs them to get the money they need to run the business. There's also a proposal for a 1% return on any fair value rate base that's above their original cost rate base. Arizona law allows this. It's like a sweetener for having assets that are considered more valuable than their original cost. Furthermore, they want a rate of about 0.40 per the fuel and purchase power costs that are tacked onto everyone's bill. It's like adding a small surcharge for the energy itself. The company also wants to mess with the rate designs to reduce cross-subsidization. This means some customer groups might be paying more than they should be to cover the costs of other groups. It is like some people in a restaurant paying for other people's food. Also, they are trying to change how they allocate costs based on customer growth. The point of this is to make sure the rates account for the costs of new customers. They're also proposing a formula rate adjustment mechanism. Think of it as a way to reduce regulatory lag. Regulatory lag is when rates don't keep up with costs because it takes too long to get approval. This mechanism would allow for gradual rate adjustments. They also want to get rid of the lost fixed cost recovery adjustment mechanism, which helps to make up lost profits. It's like saying we don't need this old mechanism because we have a brand new one. Finally, these guys want to adjust the system reliability benefit mechanism, which helps to make up lost profits. It's like saying we don't need this old mechanism because we have a brand new one. Finally, these guys want to adjust the system reliability benefit mechanism due to the new formula rate adjustment mechanism because we have a brand new one. Finally, these guys want to adjust the system reliability benefit mechanism due to the new formula rate adjustment mechanism because we have a brand new one. Finally, these guys want to adjust the system reliability benefit. EPS wants this increase to kick in during the second half of 2026. That's when they hope to start charging you more. But keep in mind, they can't guarantee any of this. The Arizona Corporation Commission, or ACC, has to approve it first. Think of it as asking your parents for more allowance. They might say no. Now, here's the legal stuff. This report contains forward-looking statements. These are basically predictions about the future. The company is saying, hey, don't take our word for it, things could change. They point to their annual report and other filings for a list of risks and uncertainties. So what do we make of all this? Well, APS wants to raise your rates and they're trying to justify it by saying they need the money to cover costs and investments. It's now up to the regulators to decide if they agree. This sort of thing will be the norm in the future. Energy companies keep spending money to make better systems, but customers will feel the sting. Now, looking at this more broadly, whether this is a strong company is a question mark. They're relying heavily on debt. It is now up to the regulators to do their job and assess whether this increase is actually justified or just trying to shake down extra money for other things on their end. Alright, that's a breakdown of Pinnacle West Capital and Arizona Public Service's latest filing. What's your take on these rate increase requests and what do you think it means for the company's future and customers' wallet? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives, and make sure you tell your regulators what you think. Don't forget to check out the Discord in the description to share this and discuss it with other people. Thanks for watching. See you next time.